Welcome to Investors Insights. Our topic today, client concerns. We wanted to address a couple of topics that our clients continue to ask us about, one of which is AI, and the other one is about the deficit. And we thought today was appropriate as we head into the 4th of July week, next week, to celebrate our country, our freedoms, our patriotism. And we thought also from the standpoint that you would appreciate this kind of insight. That said, I am joined by my distinguished colleagues on the portfolio strategy side of our firm, Bobby Norman and Ty Miller. Gentlemen, great to see you again. I know we just came out of a meeting, but you gave some great insight on these two topics, and I thought it was very valuable, and I'm thrilled you're going to be sharing it with our clients. So, Bobby, let's start off with you from the standpoint of artificial intelligence, AI. A lot of clients concerned about where's this going, how's it going to develop. So elaborate on that and give us some research and insight.
Yeah, there's been a lot of talk recently about artificial intelligence and the current and future impact that it will have on markets and our economy. And so obviously some of the market growth seen in certain stocks this year have no doubt been due to the excitement around AI. So we thought it would be a helpful exercise to contextualize the impact that the internet had on both the real and financial economy, given all the talk around AI over the past 18 months. And so we want to share a chart that shows what impact the internet had on real GDP 10 years leading in and 10 years post the launch of the internet. And analysis shows that it was exactly the same, as you can see in the gray columns in this chart. You can see that productivity increased in the years after the internet, seen in the green columns. And you can see in the blue columns, stock returns moderated slightly, but that also included the dot-com bubble bursting. So the impact that AI will have when it's all said and done will only be clear in hindsight. But we are analyzing what impacts AI will have on economic trends and also our investment strategies. And we will continue to keep our viewers updated on what we're seeing. Also, this chart also serves as a good trivia question while you're with family and friends next week for the July 4th holiday. I would not have guessed that the internet came out in 1993. It seems like it's been around longer than that, but interesting fact there.
I thoroughly enjoyed that conversation. I mean, 1993 for the internet, and then a lot of people forget, I think it was 2007, the iPhone was introduced, and it seems like it's been around. So it'll definitely great trivia cocktail conversation as we approach the holiday. And also, for those of you watching, it gives you great insight how we're watching new technology as it evolves and how it can change business models as well as economic trends. So thanks, Bobby. Appreciate that research. And Ty, another topic of concern is the deficit. So spending, I guess I should say. And so you really elaborated this morning, and I thought you made some really good points in your presentation, and that's why I asked you to share it on the vlog today. So elaborate on where we are as a country and looking at our deficit and spending.
First, for another trivia question, if you want to know who's older, the internet or me, it is the internet. So I just wanted to make sure I made that known. The internet is a year older than I am. But on the budget deficit, we have the Congressional Budget Office, the CBO. Their estimate for the deficit this year was 1.6 trillion. Well, last week, I should say, they revised their forecast to 2 trillion. So that means we have another year of a $2 trillion deficit coming up. Most of their change in their forecast here, the extra 400 billion, 70% of that was due to spending. And then half of that number was due for the student loan forgiveness. We also had, taxes come in a little bit lower than expected. But what this is going to lead to is one, a higher deficit, of course. And then two, some more treasury bill issuance. And so that's something that we want to keep an eye on in the bond market, of course. These bills, will have to be paid eventually. And one way to do that is to issue more treasury bonds. In addition to that, we're seeing the IRS starting to implement the employee retention tax credit and bring that back in gear. So the employee retention tax credit was back in 2020. It was a way to encourage employees or employers to keep employees around. And then it gave them kind of a stimulus, a credit for that. And so the problem with this is we've had a huge number of claims that have been false. And so the IRS actually had to pause the program because of all the false claims. There's 1.4 million applications out there right now. They're not really taking any new applications, but people are still throwing them in. But they're gonna restart that and start with about 10 to 20% of the low risk claims. So it's only going to expect maybe 12 to 24 billion of kind of tax refunds. So it's not a huge number in terms of the 2 trillion we just discussed, but something to keep an eye on as this program is looking to maybe restart after having to pause it just because of all the false claims.
I think we're going to hear more and more about that in the media, on the news, those kind of things. So as we continue on in the summer, so I thought your insight and the way you looked at that was excellent. And then I want to say to our viewers, today is a great example with the title Clients Concerns. Most of our blog topics come from you. And so if you're giving us emails or calls or those kind of things with feedback about our blogs or things you would like for us to talk about, please don't hesitate to let us know. We want you participating in these as well, and we want to answer your questions. Also, that's why we do the vlogs, why we do our podcast, our social media on LinkedIn, Facebook, Twitter, YouTube. We're wanting to expand and continue to give you as much data as possible, as well as the one-on-one time and our Zoom meetings and other types of events that we're hosting. So we hope you find this valuable. We know there are those of you that are forwarding it to friends, family, and colleagues, and we thank you for that. We hope that this has been valuable to you. We love your feedback. We thank you for believing in us, and also knowing that every day we come to Five Plan Partners, we're striving to see to it that our clients' lives are better, richer, fuller. We hope you have a great week as we continue in this summer that's already heated up in more ways than one. And we look forward to talking to you soon. Thanks.